So Kenya Airways shares are one of the biggest market stories of 2026, especially right now as I make this video. In just a few months, the stock has surged more than 130%, making it one of the hottest trades on the Nairobi Securities Exchange. But the biggest question many investors are asking is simple: is this a real turnaround for Kenya Airways or just another speculative rally that could come crashing down? So today we break down what is driving the surge, and most importantly, whether you should buy, hold, or stay away. So let's look at the numbers. At the start of 2026, Kenya Airways shares traded around 8.5 shillings, but by April, the stock had climbed to above 8 shillings. That's a gain of more than 130% in just a few months, 2 or 3 months. And it is also the 15-month high, with some sessions showing rapid spikes of over 30% in just 10 days. This kind of movement is not normal for a large national carrier like KQ, and it signals something deeper is happening. So why is the stock rising? There are few factors. Number one is investor hype and big name buying. One of the main trigger was reports that Ndindi Nyoro, the MP for Kiharu, bought over 10 million shares. And in markets like Kenya, this kind of move sends a strong psychological signal to retail investors. And many follow the trend. You find that many retail, as a result of this news, many retail investors ended up buying the stock, and this led to the surge. The second factor is the report of a strategic investor or a potential strategic investor who is willing to invest in KQ. There is this growing speculation that KQ could attract a strategic or foreign investor, and this has fueled hopes of restructuring and long-term turnaround. But importantly, no deal has been finalized. The third factor is increased liquidity. Large block sales from lenders and institutions have increased the number of available shares. That makes it easier for investors to enter and this increases volatility. So the fourth factor is the fear of missing out. As the price rises, many traders are jumping in due to the fear of missing out on profits, and this creates a self-reinforcing cycle of buying, and the price increases. So let's now step away from the excitement. Kenya Airways is still facing major financial challenges, including a pre-tax loss of nearly 17.9 billion in 2025. Then we have continued negative equity, we have heavy debt pressure, and this means the company is still in a fragile financial position. So why is the stock rising? It's because the market is pricing the future and not the present. The next part, let's look whether this is a turnaround or speculation. This is where the story becomes complicated. Kenya Airways has been a turnaround story for years, but the airline industry is tough. We have challenges like high fuel costs, currency risks, debt burdens, global competition. So even if restructuring happens, success is not guaranteed. Right now, the rally is mainly driven by different factors like speculation, investor sentiment, market momentum, and future expectations than actual financial recovery. Now, let's answer the most important question. Should you buy Kenya Airways shares right now, or should you sell or hold? So there are three ways you can answer these questions. If you are a short-term trader, there is an opportunity, but also extreme risk exists. The stock is highly volatile right now, and sharp pullbacks or drops in prices can happen quickly after such rallies. But if you are a long-term investor, you need caution. The fundamentals, that's the losses and debt and negative equity, have not yet fully improved. But and finally, if you are a risk averse, this is not a stable investment right now. It's a speculative stock driven by sentiment. What's the takeaway? The rally is real, but so are the risks. Until the financials improve, this remains a sentiment-driven stock rather than a fundamentals-driven investment. So what's the takeaway, or what's my conclusion? Kenya Airways is not a clear buy or sell. It's a high-risk speculative play with uncertain timing for recovery. And the rally is real, but so are the risks. Until the financials improve, this remains a sentiment-driven stock rather than a fundamental-driven investment. So that's all for me. If you found this breakdown useful, please like this video and also subscribe for more insights like this one. And tell me in the comments, would you buy Kenya Airways at this level or stay out? See you in the next video.